The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Today is Tuesday, September 25th, a gorgeous day at the headquarters of Technical Trading and Investing, TFNN.com, in the center of the universe, Clearwater, Florida. It is Yom Kippur, also known as the Day of Atonement. And why is that important for traders? Because a lot of traders, especially in New York, happen to be Jewish, and they take days off. In fact, I was listening to a radio commentator last night saying he wouldn't be here today. I think he's on at night or something. I just happened to be listening to it. But it's the Jewish peoples traditionally observe this holy day with a 25-hour period of fasting and intensive prayer. Not a confessional kind of guy. But oy vey! I'll give an oy vey out there for all those. That's about the extent of my Jewish knowledge. But I have been there. I've been in Israel and stood in a place where you could look 4 miles either way and see the edge of the country. It is 8 miles wide in one spot. Kind of hot and dusty for me. I kind of like the tropical weather of Florida much better. But it is Yom Kippur. Know that we will be looking for lighter volumes today than regular, and it's already coming through. I'll update it here, but I figure that we could probably say volume should be off 20% this day, just naturally. We're just turning 2 billion shares on the consolidated tape from the New York Stock Exchange. So know that we will be having some issues. We got up to 1463 today on the S&P. I suspected that we'd get a little bounce out of that today, and that would be the time to start pulling the trigger to be short. We actually bought some puts into the November time frame. There's some, I think, some fairly overpriced stocks. The one I'm in has over a 100 PE looking forward, and kind of hard to think that you'd pay $100 to get $1 back, a lot of these high flyers can get that way. I'm not one much for shorting Apple. It's got a PE of about 10. In 10 years you double your money. So, or 100 years you would double your money, I guess, if you think that 1% is a decent return. Actually, that would not work out over 100 years because you'd actually compound. But you get the idea. Just if you're shorting stocks out here, there is a lot of low-hanging fruit, and shouldn't be a bad deal. Again, anytime you'd like to call, you can always give me a ring at 877-927-6648. That's 877-927-6648, and it's not a bad deal. You can give me a call. We'll talk about enjoy callers and find out what's going on. It's always kind of a quiet time during the day before we get into the last hour of trading. So we have a little bit of calm before the storm, everything going on. We've got a lot of news today. We'll see how quickly we can get through it. First thing is the breakdown of chips, and the bill of materials is in for the iPhones. I actually did a special report for the Tech Insider for what those actual chips are, and probably the chip that wasn't in it that is probably going to be the most money-making chip for a company in the coming future. So you can always get a 2-week free trial by going to TFNN.com. In the daily newsletter, I was finding stocks that I wanted to be buying puts on. I'm not predicting the end of the world, but there's a lot of stocks up there that have been high flyers that I think could rapidly come back on just a normal pullback of the standard market. Chips that you may, charts that you may want to be looking at in the Apple trading sector, especially now that we've seen Apple really has kind of come off its high here. And surprisingly enough, these have not been really strong stocks. You would think with the getting the Apple seal of approval and probably some large contracts, these guys would be doing a little bit better. But stocks that should trade in league somewhat with Apple are Omnivision Technologies, OVTI, Avago Technologies Limited. They make basically the radio that goes in it, AVGO. Qualcomm, of course, they make the modem that goes in before the long-term evolution chips. And Skyworks Solution, they make SWKS. They are making the antenna switch for it, kind of the smaller part of the chip. ARMS Holdings, they basically make the original design for the processor. Apple had them make significant changes. We talked a little bit about it maybe 6 months ago, that Apple had finally gotten and hired its own processor design team and hired about 1,000 engineers for all the products that it's building. And so they've got a lot of people building on it, but they're starting with the ARM design and working with ARMS Holdings. ARMS actually holding up too bad. Qualcomm not too bad. The rest kind of look a little different. Quint Semiconductor is another one. And we had a question from the Den about what it actually costs and how these chips are being, I guess the phones were being paid for. But if you're like an AT&T or Sprint, you're basically paying Apple $650 for the phone, and how much does it actually cost Apple to make? iSupply is a company that goes through the actual parts, tries to figure out closely as possible, estimate what the price is going to cost. You can pretty much say right across the board that the cost of building an iPhone 5 is about $10 to $15 more expensive than an iPhone 4. If you actually look at everything, including assembly, the parts and assembly would come out to about $207 for the baseline phone. It's a 32 gigabyte version, about $209. So you can see just, and even the 64 gigabyte version is about $230. Of course, they ramp that up for $100. They make a lot of margin when you buy the high gigabyte versions of their phone. So yeah, even at the most expensive phone that they build is going to be like $238. So it's if they're getting $650 for the base one, maybe they're getting $750 back from the company when they buy the more expensive one. But you also notice that they ramp up significantly your cost, maybe $300 at the AT&T site compared to $200 for the base phone. But I don't, you might see the margins actually creep down just a little for Apple in the coming quarters. But a lot of what we've been seeing out here is pressure because they didn't think that they actually had enough phones and that they sold out. Well, I've been talking about that for 2 or 3 weeks. Everything I had heard that was Sharp was building the displays along with Samsung. There's a fairly decent article out today from Bloomberg that actually says it's another manufacturer, but basically gets into what I've been reporting for the last few weeks, which is that they decided to make a very thin glass to make the unit more sensitive to touch. There's also a patent out that makes me think that maybe one day they'll be able to turn on not just touch, but how much pressure you're applying. Because Apple did apply for a pressure-sensitive tablet and iPhone interface. I don't know if this one can already do it, but it looks like the change in doing it could be rather significant. I think there's another one called iTeardown or something like that. In 7 steps, you can actually tear apart the current iPhone 5, opposed to like 30 steps for the iPhone 4S. So everybody's happy that if you do crack the display, which is supposedly going to be much easier on these new phones, that at least it's much easier to go ahead, pull the phone apart, just put in a new display. I don't know how expensive it's going to be, but it's certainly going to be a lot less time sensitive. They still use those horrible little pentafoil screwdrivers Think about a real tiny kind of daisy-looking screw. Very weird. You can buy those on some of the websites so you can take apart the phone if you need to. But they certainly don't make it easy for the normal slub to take these apart. One tip, that is, if you ever drop your phone in some water, the first thing you should do is find rice, a whole bag of it, and basically get all the water you think you can out of it. Get it a little warm with a blow dryer and stick it in some rice and let it sit for a day. A lot of times that rice will be able to be a fairly decent desiccant and save your phone. And then you can go try to see whether it dried out or not. If it didn't, maybe you have to go and get it repaired. But a lot of times, if you catch it quickly, shake all the water out of it, put it in rice overnight, it'll suck out all the water that normally would be stuck in your phone. Just suck it right out like a wick. Google is kind of holding its fire. They do have a map application apparently ready, but the executive chairman, Eric Schmidt, told a group of reporters in Japan that the company, in essence, has not submitted that native Google app. They're more than willing to let Apple twist in the wind over the Maps issue. So it's going to be kind of interesting to see what's going on. Let's see if we got anything else. Just checking the news here. Okay. What else do we have? That's kind of interesting. One of the things that really caught my eye is the last few days and the news coming out on electric cars. I reported almost a month ago, maybe 3 weeks ago, that the CEO of Tesla said that in the next 6 months they were either going to be a wonderful success or a horrible failure, and electric cars have been tried even since 1900. The first car wasn't gas-powered, it was actually electric-powered. Electric cars have been around and tried to be around forever. The U.S. government threw huge amounts of money, billions and billions and billions into battery technology development. The batteries apparently are still not where they need to be. It's causing an issue. And today Tesla actually said, as our main focus is on quality, we have methodically increased our production of Model S at a lower rate than we had early anticipated because of quality concerns. And, you know, is the car cool? Yes. Is the range still too limited? Yes. Could you buy a really hot muscle car and in 10 years get your money back? The answer is still no. You can go out and buy a Boss Mustang, drive the living daylights out of it, pay for gasoline, and still be no more closer to the $79,000 price tag of this Model S. We're going to get into more about electric cars and what we need to know about it. When we come back, you can always give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney Financial Advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Anyway, we're talking a little bit about electric cars, especially since we've had so many things. We've had a few things come out. We're going to get to it here. Let's see here. Washington basically put in $25 billion in cheap loans to company to make electronic cars. And they've used about $8.4 billion of it so far. But the loans are guaranteed by the Department of Energy. Unfortunately, they're all off balance sheet. So all these loans that no one is going to take credit for are no different than the Enron ones. So kind of a neat trick. Toyota has given up plans on selling significant numbers of its all-electric vehicles. They had a thing called an EQ car. They've got about 100 of them built, and they're giving up on it. They're going to sell the 100 they built, and that is it. Tesla has committed to building a whole bunch of recharging stations up and down between San Francisco and L.A. If you buy a Model S, these charging stations will be free. You can recharge from a dead battery all the way to full within 30 minutes with this new charging station that they have. Even if you charge these things at home on 110, you're basically talking about $1.50 or $2.50 to give the equivalent fill-up of an all-electric car. But I guess the thing that we get back to is the battery technology, although they spent all this money on it, have little to show for it. General Motors basically came out about 6 months ago with this great new technology that they all crowed about and said how good it was, and really haven't seen or heard anything from it yet. The sales are just miserable. They're giving, by the time you look at it, they're selling a $40,000 car for the Volt for about $20,000 to get them out the door. They're costing about, with R&D, about $200,000 at the current run rate. They never can make enough of them ever to make any money back. For a big company, is that a bad thing? If they could get that battery technology, no. The problem is that every time someone says they've got great battery technology, it ends up being rather poor. And I think the claims that the S model had from Tesla were a little bit exaggerated from what they actually are. So they've got a lot of problems. Tesla's still not getting out of the game, but like the CEO, I think his name's Elon Musk. You've got basically a company that is either going to really win or be totally broken out of business in the next 6 to 9 months. And, with the economy the way it's going, a lot of people willing to buy a car for $79,000, drive it for 3.5 years, put another $20,000 worth of batteries in it when those batteries no longer work well enough. And that's the kicker, is the battery technology hopefully will get much cheaper down the line. Maybe you'll be able to buy one of these $79,000 cars for $10,000. The batteries get cheap enough in 10 years. Throw in some cheap batteries, but probably with 10 times the range of what you've got now, and have a decent car. But no matter how much you wish a lot of this green technology would come along, it just doesn't come along. I thought that there was a good chance that this would be the time that they'd actually get it going, but still the technology lags too far behind. Cough button in this. Still need a cough button in the studio. We'll get one today out here. Anyway, we've got to look at these electric cars for what they are, and that is a technology of the future. And sometimes technology of the future is always the future. It never becomes the now. These cars are going to be a Zorch in 3.5 years. Is anybody going to want to put 10, 15 grand of batteries into them to get them moving again? And that is the big question. I think it's kind of neat that Tesla is building this infrastructure, and they've got this super fast charging system. 30 minutes, though, still seems to me to be quite a lot of time to charge the batteries all the way back to full. If you're driving between San Francisco and L.A., maybe there's a rest stop there and you can stop and eat your lunch. But other than that, do you really want to have to sit and wait for 30 minutes to charge up? That's another thing that really has to get fixed for these electric cars to work. So a lot of promise, a lot of broken promises, and maybe a shopping mall. It might be neat. Normally, I had a question in the den, not enough government funding? No. Government works very well when you talk about things like DARPA, when it's pure research. When they give money away for other people, it never works out so well. A lot of things we get are when the technology comes at least close enough to working that corporations can go out there and monetize it. We still just aren't quite there. We'll be back in a minute.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, we go to our foreign correspondent, the kitty that likes to eat the watermelon, and he doesn't have a lot of comments here today. But it's just neat to see a kitty eating watermelons, isn't it? I could sit there. In fact, I think the internet was actually designed for just that. Even a dog eating a watermelon. YouTube is just filled. In fact, I think they could probably get rid of everything other than kitties doing neat things on YouTube, and everybody would like it. So anyway, we want to get rid of watermelon. Well, not get rid of them, but take a look at the watermelon kitty and get back to the winners and losers. Losers today, Staples is the worst performing stock in the market. Let's see if I can get a chart up here. We're looking at this. We talked, I think, on Tom O'Brien's show during the Tech Insider about this, and we looked at Staples, we looked at Office Max. Almost all of these looked like they were going to have some fairly extensive problems. The office products retailer said it would close 15 more stores by the end of the year, reduce its square footage by about 15% at all the stores by 2015. The stores were not disclosed. They're going to write off $1 billion. They're still having a real problem, especially with business, small business, spending any money in the United States. They're very wary of a lot of small businesses that, especially if you're in the retail food business, I guess the Obamacare thing is going to desperately hit those mom and pop little locations and stores that sell food and a lot of breakfast, lunch kinds of places that per employee they could end up spending about $4,500 a piece. And, if you've got 4 or 5 employees, that may be what the owner is totally making. And they expect a lot of those places to close. Some of the other businesses, even if they're not in the restaurant-style business, are going to get hit pretty hard. And Staples is looking forward to next year being a weak year as we go in and find the unintended consequences, or maybe even intended consequences, of having employers pay for all the health care when they have not done so in the past. Wanted to go through the charts of the stocks that Apple, basically the Apple supply chain, as it were. Wanted to say a few companies were looking fairly decent, or at least up the upper ends of their trading area. And ARMS Holdings 1, ARMH, of course, they design, they do not build anything. They basically sell a tape that you give to a manufacturer, such as Global Foundries or Taiwan Semiconductor, and those guys will give you a chip that you can glue to a printed circuit board and do whatever you want with it. ARMS Holdings very close to its highs. They've got 2 previous highs in the low $29 range from April 3rd and April 19th. With about 3 million shares at the high in there. We got in very close to that, but about 50 cents short on 4.6 million shares. That suggests we're going to get one more test back up into that mid $29 level. You've got 2 huge gaps down below in this, and that's $24 to $22 range. Probably the best thing ARMS Holdings has going for it right now is that Global Foundries has said that they'll be in the 22 nanometer technology a year earlier than previously predicted. Unfortunately, that still takes them out to 2014. And that's time is money. Intel can build those chips, and I suspect we see a slew of chips for phones and tablets using and sipping very tiny amounts of power with the new 14 nanometer technology by the time that ARMS Holdings gets to 22 nanometer technology. But still probably one of the better stocks out there, at least in the supply chain. Avago Technologies, AVGO, another one building a lot of parts in that iPhone, not looking good either. Down fairly significantly today, but on low volume. Looks like it wants to come back and at least test the last major low, which was July 12th at $32.14. Micron Technologies, they're kind of in a crossroads here. One of the interesting things is one of the other suppliers in the iPhone they have bought, so they're actually going to pick up a little business just in the fact that they're doing it. It really looks like we've got kind of a asymmetrical triangle that looks like it's going to take another few weeks for it to complete. Just think of a greater sign, but looks like if that completes, it would be take another 2 weeks for it to come to a consolidation. One of the businesses where it just seems like they've never been able to make money in the last couple of years, and still predictable. OmniVision Technologies, they make the cameras for the iPhones, and you think that, if anything, it's getting a lot of good reviews for the camera in the phone. It's been decidedly pulling back also off the highs, its last high. I wouldn't say the volume was absolutely killer. You had a high volume spike that came in 11 million shares. So you have the opportunity of getting that $17.85 high from August 31st retested, possibly in OmniVision. But right now it doesn't look that strong. Qualcomm, another one out here. We're looking at Qualcomm kind of back into the gap. It looks like maybe we might get one more test on this back higher. I suspect it's been one of the better performers for the fund managers. They'll probably try to hang on to this thing for a while, but take a look. But fairly decent gap in here. That gap did come down on high volume. That's going to be a rough area for Qualcomm to get back into. And that's going to be about 42 million shares. So if you can see it go through the $66 level, maybe it's got some higher, but I suspect it's going to bang against those levels. And I'm kind of wondering why, if all the other stocks in that same supply chain in Qualcomm can't make it through, why would Qualcomm? So a little sanguine on it. One of the worst performers out here is Skyworks Solutions, SWKS. Just got super hammered. They make a switch for the phone. If you've ever looked back into the antenna of these phones, they're based on fractal mathematics, and a lot of it is one of those things where you can see how these chips are used. But I think they've lost some other contracts and some other phones, and that's been a problem. Of that. We've got a, let's see, it's market. Steve from Princeton's on the line. We'll go ahead and talk to him. New Jersey All Business Insurance. Go ahead. Oh, maybe it's small business insurance. I think it's what he's trying to say. How you doing today, Stephen?
Yeah, I was just listening, and you mentioned the requirements under Obamacare for small businesses insurance, and I think there's some confusion about the subject.
Go ahead.
The requirement is only for businesses with more than 50 employees.
I'm pretty sure that that's incorrect.
Well, I have it.
I'm not debating it. It's 2,500 pages, and I've heard every kind of discussion. But I'm pretty sure now. You may be right. I've heard it several different ways, though, and I think the most important thing was that we found out that businesses like McDonald's had to get waivers because it did affect them.
Well, most McDonald's employ more than 50 people.
Okay.
So that's the threshold. I mean, it's very clear. You can go on any website you want. You can find. There's a threshold of 50 employees. So businesses with fewer than 50 employees have no ramifications, and there's no requirement.
In next year or ever?
Ever.
I'm going to go back and research that because I'm pretty sure the Wall Street Journal article I read specifically talked about a lot of these mom and pop restaurants that had people working 20, 25 hours.
Well, the Wall Street Journal is well known for being on the right side of every issue, and so I think.
So, but maybe you're on the left side of every issue.
I'm trying to get to the truth.
I'm not debating that either. I haven't read that 2,500-page act, so I don't think anybody.
I haven't read the act myself, but I've read summaries, and they've been produced by independent agencies, and those are the facts. Now, I understand how everyone who doesn't care for the president wants to portray all his efforts in the worst possible light, and I understand that. But I just think the facts should enter into the debate at some point.
I wish it was easy. When you make something 2,500 pages, it makes
No. Well, that's why there's summaries. I mean, most laws...
Unfortunately, the devil's in the details.
Right.
And every time I look in that thing, I see the devil. And that is, as I think the terminology, as the, what's Sibyllus' title? Health and Human Services.
Right, exactly.
And it says everywhere, as she may determine, right? So basically...
I understand every detail of every regulation on a state, on an individual level. Some of those are still open-ended. But the premise is that they're exclusions, and the exclusions are not going to be removed, without an act of Congress. And specifically... And this was negotiated when they passed the act. And the 50 employees...
You mean when they said we have to pass it to find out what's in it?
Well, no. There were, many representatives and senators don't bother to pay attention to what they're voting on, but some do.
Yeah,
and the ones that do, the ones that are actually in the negotiation phase, they're very aware of what's in the act. And 50 employees was made for a number of reasons, all worthy ones, and that was part of the agreement. I've
got a pretty much good BS detector, and when you need 1,200 exclusions this year, that tells me that there's already a problem. When you've got to give 1,200 companies an exclusion right off the bat because you did something wrong.
Well, many companies have more than 50 employees.
Right, but why would you pass it?
You see, if you're barely over the 50, then you can apply for an exclusion.
Right.
Okay, and that's perfectly appropriate. I mean, I think on a case-by-case basis.
Why would you instantly have a bill that then had to be waived?
Well, the point is, if you can make a rational case for why the 50 exclusion should be adjusted and there should be some discretion, whether it's 51, maybe you have 51 employees, and I mean there should be some range of discretion.
It's interesting. I think that,
and also if you choose, you can choose to not pay for the insurance also for your workers, and then you pay a fee, you pay a tax, or some people call it a fee, some people call it a tax.
Yeah.
And that tax is $2,000 per employee, but it only kicks in when you have over 30. So the first 30 are excluded, and then the next 20. Since you obviously have to have more than 50, the next 20 would be charged. But the first 30 are excluded.
Yeah, it's interesting. Who knows what the truth is? We find out that a lot of bills now, especially when you talk to judges, they talk about a living, breathing Constitution instead of what it actually says. So the other thing is, what a judge says it is what it'll be.
Oh, sure, but that's true for everything, isn't it?
I hope not. I wish that they'd actually go to the letter of the law and the spirit of the law when they look through these. Not, the biggest fear I have is when we have a Supreme Court justice say that our Constitution's crap and you should go get the South African Constitution written by a bunch of communists because it's much better. Those are the things, you get these bills and they become never-ending things. I guess the other thing is you're probably right. I have a absolutely seething resentment for health care run by the government. I had 5 partners, 4 of which were Canadians. Every single one of them had health care insurance right across the border from Toronto into right across the border anyway. Every single one of them. When he had his health, when one of the guys had a heart attack, he had to wait 6 months. He flew down to where I was working at the time in Cincinnati to get his heart operated on. I had an office in Surrey in England. The exact same thing. So I've always seen it just be horrific in other places. And, is it a great idea?
Obviously, if it wasn't a good idea, I guess Romney wouldn't have thought it was such a great idea when he was governor of Massachusetts. So obviously there's some value to it because it was originally proposed by Republicans and by the Heritage Foundation because they thought it was a great idea.
Well,
and much better than
a Republican isn't a conservative, and I tend to find myself.
I'm just saying. Many Republicans supported it when it originally came out, and Romney thought it was good enough for his state. And the Heritage Foundation, which is the most prestigious conservative think tank in the country, they proposed it, and they proposed it primarily as to oppose. Originally, when Hillary Care came out.
I would say this, and it'll end the conversation here.
Sure.
If your friend jumps off a cliff, would you jump off too? Just because someone else does something, I don't believe it. I'd want to do it too. I've just seen from experience.
No, I'm just saying it's not a democratic idea. It's not a liberal idea.
I've seen it in at least 2 countries I've had partners with, and each one decided to get private insurance instead of the state-sponsored one.
Right.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we wind down the show, we've got one phone call, hopefully enough time to take it, and that is Doug from Atlanta. How you doing today, Doug?
Hello, David. I was wondering if you had heard anything more on the progress of Maxwell Technologies.
Yeah, I mean, basically they've got everything for a market that looks like it's having issues. They were selling a lot of product in China, especially for wind-powered technology, and of course China shut off pretty much all that new windmill electric producing technology, and they weren't very good. At least the the company wasn't very good at telling exactly everybody the same story. Basically, they told a few people early on, or at least in advance of the problems they were having, and didn't tell the entire market. So I'm kind of ticked off at the management of the company at the moment. But you need a thriving hybrid market or electric car market to really make this thing work. They've got the best technology for a market that just can't get off the board. This would be a great, if you hear about battery technology that actually is available, that will take off, it's really going to be great. I think that they're going to do okay, but I don't think that they're going to set the world on fire until, even some of the anti-idling stuff, everything should be going their way. And unfortunately, if people aren't buying cars, they're not buying hybrids, and they're not buying electric cars, it just does not matter. You've got to get them to buy.
Specifically, I was wondering, what the energy density of these specific caps are, as in, why would we have a chemical battery if we could use a large capacitor?
Because there's a difference between energy and power. You may have a hose that could fill a pool in 1 minute, but it's only going to put it, maybe the first 10 inches in the pool. Or you may have a hose that you siphon the water out of the pool, and it takes, 20, 30 hours to drain the pool, right?
Right.
So does it come in, does it go out fast? And the idea is that it goes in and goes out of one of these ultra caps very fast, but there's not a lot there. So right. you still need the quotient that isn't there, which is that giant pool that can go in and out if you wanted to do it all. Now, there's probably 100 articles over the last year about using graphene as a much easier way of putting in power density, and it's gone up tenfold over the last 5 years. If it goes up another tenfold, it could easily give that kind of electric car market exactly what it needs. Huge, being able to charge the thing in 2, 3, 4, 5 minutes instead of 30 minutes on some, pass by. But the energy density is just not there. The cost's not there, and they need, it's chicken and the egg thing. But we certainly need, I think the first step is going to be some kind of battery technology married with this, and a hybrid solution, and the more money they throw at it. But it was very promising. It just didn't get there, and I'm kind of worried about the stock personally, because of how many of the insiders blew out their options at $9.50. You see, this thing came up to $9.14,
right? And
that's where the huge amount of resistance is, and I think it's because of that day where they did come out. They were a lot of the internal people were actively selling their options, which were about $7.50. So it's not good when the internal people lose confidence in their own company.
All right, thank you.
Okay, appreciate it. Thanks, everybody. I always have a good time doing the show when you call in. Remember, you can always call us at 877-927-6648. Have a great, safe, and wonderful evening.